The flood cleanup began today in the Melbourne suburb of Maribyrnong, but in further north, towns in regional Victoria were preparing for the worst. Suncorp is one of Australia's largest insurers, and as of Monday, it had received about 1,000 claims in total from the recent weather events. Joining me now is Suncorp Chief Executive Steve Johnston. Steve, thanks for your time today. Are more claims now starting to come in?
Yes, Ed, what you find in these flooding events is it's usually a slow pickup of claims. Obviously, people are dislocated from their homes or in evacuation centres, so it takes some time for all the claims to come through. So we've now had about 1,500 claims, and we expect that to continue to increase over the coming days.
Yeah, most people would think of Suncorp as a pretty Queensland-centric bank and insurer. So what part of the country are most of these claims coming from, and how quickly can you start to process them?
Obviously, Suncorp, the brand in Suncorp is very much connected to Queensland, but we are a multi-brand business. So particularly in Victoria, AAMI is our lead brand in that state. GIO also covers some people in that state as well. Apia is another one of our brands. So we are a multi-brand business with exposure right around the country. So we'd expect most of those claims to come through AAMI and some in Apia as well, and we'd expect that to continue to evolve over the next couple of days as people get back into their homes, assess the damage and lodge their claims.
There's obviously been a lot of floods and weather events this year across the east coast of Australia. How large is Suncorp's current disaster provisions, and are you just going to need to keep raising them aggressively each year?
Yeah, obviously, Ed, the La Nina weather pattern has obviously conspired to create some abnormality in terms of the actual claims outcomes, the flooding that we've seen over the last 2 or 3 years. So we put aside over $1.1 billion in terms of our allowances, and as you know, we've got a very strong reinsurance program sitting around it to provide the sort of protection that we need and that we need to then provide onwards to our customers. So very much the last 2 years and the end of this year have been very much La Nina weather. We expect that to be an environment where we would exceed our allowances. Unfortunately, we've had 3 of them in a row, and we'd hope that going forward that we would get back to more normal conditions, and that would see us sort of actual outcomes sitting well within those allowances.
Today there's just been a report from S&P Global Ratings, and it says Aussie insurers won't need to tap reinsurance after these floods. Is that true for Suncorp?
I'd expect that to be the case. Obviously, it's early within our financial year, and I think these claims that will emerge from this event, while they are very devastating and they're very impactful for those communities and those individuals involved, they'll fall short of our reinsurance covers and probably reasonably well short of those covers. The big event, obviously, earlier in the calendar year was the flooding across the east coast of Australia. There were 50,000 claims with that event. It was one of the biggest insurance events in history in Australia. And we've almost just ticked over 60% of those claims finalised, and $1 billion of money put back into the community to support people get back into their homes.
This week there's also been the High Court ruling in regards to COVID-19 business disruption claims. How's that ruling affected Suncorp?
Well, obviously we set aside a provision. I make the point that we had gone into the pandemic with very many of our policy wordings updated to the Biosecurity Act, which wasn't in discussion in these court cases. So our issues were significantly less than some of our insurance colleagues in the industry. So we had set aside a provision of around $195 million. We expect to be able to release the majority of that as we come through our half-year financials, and we'll go through the process of closing out those reserves and undertaking all of our valuation work based on the 31 December outcome. So I expect that will be part of the story of our half-year result.
Yes, Steve, earlier this year we had you on the show. You were talking about how Suncorp's accepted a $4.9 billion bid from ANZ to sell its retail bank. How's that transaction progressing?
Obviously, we're in the process now of seeking the key regulatory approvals that underpin the deal. We've got a very good relationship in terms of the separation activities, the day one activities that we have to jointly align with ANZ. That work is progressing well. We are in the process of lodging our formal submissions to the ACCC. There's obviously a process that ANZ go through with that. They're the primary provider of those submissions, but we do also have some submissions from the Suncorp perspective. They are in the process of being lodged now. We've also had some dialogue with the state and federal governments around the necessary national interest issues and the Queensland issues that we've been talking and have been contemplated. It's been a constructive dialogue, and we're just deliberately working through a process now to complete all the necessary approvals, and that will take us into next calendar year, no doubt.
And Steve, how confident are you feeling right now as a chief executive? We've got rising inflation and this now threat of a global recession.
Well, obviously inflation's an issue across the industry. One of the things that we've been able to do is stand apart from it to a large extent. We've got a big best-in-class claims program. We're trying to significantly improve our claims processes. So what we've seen, and particularly home inflation, is we've been able to suppress that. We continue to look for opportunities to do that. We expect that we'll start to moderate over time, and it will be a particular challenge in terms of a recession. Well, I think it's still to be determined whether that is going to occur, and we've got a lot of faith in the Reserve Bank in terms of the way they're managing the economy. We don't, obviously we're seeing some evidence of household stress coming through, but it's not material at this point. People seem to be adapting pretty well at the moment. We just got to keep a close eye on it for both the banking and the insurance side.
Yeah, you mentioned the Reserve Bank. They've lifted the cash rate by 2.5% this year. At the same time, property prices are starting to fall across the country. How do you expect Australians with mortgages will be able to cope if property prices keep dropping potentially 15%?
Yeah, well, I think, Ed, you've got to look at it in the context of the appreciation in property prices over the last couple of years and through the pandemic. In some cases up by 30 and 40%. So, you know, we've had some discussions today in our team around what reductions have come through, and there's some 5, some 10% reductions in property prices. But it's got to be seen in the context of the 30 to 40% appreciation that we've seen over the last couple of years. So I think there's still a fair bit of headroom to move. I wouldn't disavow or talk down for a minute the cost of living pressures that people are going through and managing at the moment with high inflation, interest rates going up. But I think households have demonstrated over a long period of time that they've got the capacity to manage with the times and manage the circumstances. And of course, at the moment, we've got very strong employment levels, which is underpinning the ability for many consumers to be able to not only pay their loans, but to pay their insurance and meet their other obligations as well.
Well, Steve Johnston, Chief Executive at Suncorp, thanks for your time today.
Thanks, Ed.